Good day, AVZ Traders. I trust you are well. Welcome to our third broadcast, and I hope you are enjoying them and reviewing the ones that you've received already. So today I am looking at gold, and I think you'll love it. Now, have a look at the structure of my screen or the way it looks. When you are sending through your questions, this is what I ask you to do. It makes it easier for me to review and to make notes on your charts. The day, open and end fits nicely into your screen. So avoid scrunching them up. Don't scrunch them up like that. And then have overlapping days. That doesn't make it any easier. Just that day is fine. We've got high of yesterday. We've got low of yesterday. We can clearly see the upper asset valuation zone. We can clearly see the lower asset valuation zone. We can see the midpoint, the value of indecision, the valuation zone of indecision. Now, I mean, this has got a few things in it that I think you will like. So I took a trade here. Sometimes I show you the marker, sometimes I don't. But I've shown them here because it's something I want to point out for you, which may not have come clearly through the course. I think I mentioned it, but I want to just highlight it again. Took the trade here, got out here. What I'm pointing out for you is that this yellow block here had a few things happening. It one is this candle here. You can see 1630 MT4. That was the open of the UK markets, which is open of a session. Just be aware that things can get dramatic when the US markets open. The big boys and girls coming out to play. Dramatic things can happen. So you always need to manage your trades tightly, your stop tightly. But I think of greater importance was this candle here. So that was the open middle candle. That candle here was, I think it was USISM news, red news. Now, I don't particularly care about the content of the news or any predictions around the news. It doesn't change the way that we trade. What we need to be aware of course, is when Forex Factory or whatever calendar that you use shows you that there's red news coming. So when there's red news coming, my rule is I want to be out of the market at least one candle before or two candles before the market, because anything can happen. This was pretty calm. Sometimes the market can just accelerate down, come back, go up again. So wherever you put your stop, you get stopped out. And worst case, I've seen the market's gap, which is even worse because it just goes past your stop, you get stopped at a worse price, right? So I always try and do that. So the reason I mentioned that is that after taking the trade here, I managed my trade quite stringently and got out just at the open of the US market as we were trying to break out above here, and we're getting into the upper valuation zone, which is what, guys? That's the sell zone. So I expect there to be a lot of sellers here. Eventually, they got into the market and kind of went sideways. So before the news, I got out. But let's have a look at the structure of what took place. Manually draw in, guys. Just put them in. High of yesterday, low of yesterday. As you're doing that, you can see, okay, bears were pretty strong or good here, and we kind of ended in the, just below that. Like happened, on the day that we're looking at, and you can see what took place here. You start to train your eyes to see things. Okay, remember we said when you're in the middle of the midpoint AVZ, we don't want to do anything. We want to trade pullback. So breakout pullback, you could have jumped into that. So just quick, doesn't take you long, right? But here we come to this day. So during the in session, bulls tried to break out, no follow through, so nothing to do. We are in the upper valuation zone, sell zone, guys. So there you can see, I mean, that was saying the price is unacceptably high, rejected that. I mean, I just put a line here, quickly show us what's going on in the time that we have. But you can see there's multiple asset revaluation saying, yes, in the sell zone, the price is too high, we've got to sell. Eventually, the bears kicked in with a beautiful bear trend candle. The problem with that is that you are coming to the low of the session, Asian session. So you don't have one-to-one risk reward. So best just to let that go. I wouldn't take that trade. But they've defined for us a range, right? So I'm kind of saying to myself, well, if the bears are strong, whichever way we break out, they want to get to a measured move. There is the measured move. Okay, you guys know how to do that now. There is a measured move breaking out beneath that trading range. Okay, I'm just going to show it one more time, but not one more time, many times, but here it is. So we use our Fibonacci retracement. There is the low of the range. Pull it back up to the high, and there is the measured move. And we got to the measured move, which was in the middle of the midpoint of yesterday, the value of indecision, the asset valuation zone of indecision, where you don't want to do anything. But at that point, while we're getting there, the bulls thought, well, I think the price is actually getting a little bit cheap here. We don't want a low price. Let's go up, but they failed. So any attempt by the bulls failed. So the bears were still selling. So we have that. So three revaluation. The bears just want to sell. The problem is, you are coming to the middle point. Had we had a decent bear breakout, continuous pullback, then we can look, remember we said we trade strategy portfolio number 2 in terms of a test of the average price. Now, they're not testing the average price. We're just going sideways here. So there's nothing for us to do. Another trading range created for us. Bears breaking out here. That I was watching that. That was in the middle of my trading day. I was watching that. I was saying if the bears could give us a decent enough candle beneath here, and then we come back and test the average price, I could sell. But we had that tail and that one, nothing for me to trade. Doesn't fit in as a decent enough breakout beneath the range of test. So, even though we tested the average price, but this does not qualify with strategy portfolio number 2. So I just let it go. Again, remember, as you are trading, if you take a trade and you're like, oh, I don't know if I have, your stop must be in the correct place, guys. So stop above here. And then, of course, as we said, once you are in, you take half off of your stop and then trail. So even if you've taken the trade somewhere here, made the decision, perfectly fine, you could have managed it. But, that candle, nothing to trade. Then you get that and you're almost at 1-to-1. So let it go. Now we're getting into the lower asset valuation zone where we find what, guys? We find buyers. They're going to say, oh, no. Yesterday we said this price was too low and we went up. That was yesterday. Now asset too lowly valued and we push up and to get a new price. So expect those bears to keep saying, the bears obviously are going to say, well, remember that whole thing of decelerating from 3.3 to 0 all the way down. But the bulls are saying, no, guys, unless you are super strong, all the large institutions, unless they disagree and they say this asset still needs to go lower and show us by strong trend breakout candles beneath the low of yesterday, there's nothing to do. So bears tried beneath the measured move, failed right there. They tried again, one trend candle failed again right there. Tried again, failed. So I could have marked that as well. But they tried 1, 2. Let's put it in just so that we can see. Remember, you've seen all of this before the things, other candles come. So they tried there, failed, tried there, failed. Bulls still not strong enough. Bears tried one more time, failed, and the bulls came in and gave us a decent enough candle. Not the strongest, but the body is bigger than everything else here. But there's still nothing that we are going to do at that particular point. Now, I want to put in an EMA, which I had cleaned out while I was cleaning out my charts. Our 20 EMA, which tells us, so you see, there, the strength has been broken. And then we have the close above the 20 EMA. So at this point, you've got to be thinking of buying. You're in the lower asset valuation zone. It has set up there nicely. Bulls have accelerated, getting to the midpoint, but the whole structure of revaluation is taking place. So you've got to take this trade. Just put your stop beneath here. You could even have a stop beneath the low of yesterday. Okay, I put my stop beneath there, got out at 1-to-1. If you had put your stop even beneath the low of yesterday, you still would have gotten out 1-to-1. So that was a beautiful, beautiful trade. Everything set up nicely. You take the trade and then you manage it, like I said earlier on, based on the news. So had the Bulls been, well, the Bulls were strong enough to get above it. But remember what we said, guys. Look at that cheat sheet that I gave you. Print it out, keep in front of you. What do we do when we trade in anything, not the index above the high of yesterday? We do nothing until we see a strong breakout test of the EMA, and then we buy. So right now, nothing to do. So this was a beautiful, beautiful, beautiful. This just fit in with everything that we spoke about. So guys, please do not forget, review your notes. Upper asset valuation zone, we're looking to sell. Lower, we're looking to buy. Midpoint, we want to see strong breakouts and tests of the average. And when you see it traded, now in terms of trade management, if you put your stop here, as soon as you're in the trade, you take off half. That's my timer. You take off half the risk. Market starts to go your way, you bring your stop to break even, not just at the entry, but you can put it beneath a candle. That's perfectly fantastic. Then you get out, you have been rewarded quite nicely. All right, guys, name is George. Keep those questions coming. Let's use it. Unlimited Q&A. Screenshot, put it onto PowerPoint, or as I said, you can do a save as picture. Right, and all you want is to have, you don't want this post image on online. Active chart as is. Once you save that, it's gonna save it somewhere in your thing. Then you can copy that into your PowerPoint. Pretty easy to do, but it's nice and clean and pristine. All right, guys, name is Dr. George Nyabaza, the Craftsman Asset Valuation Zone Trader. I'll catch up with you again in the next broadcast. Cheers. Bye-bye.